Your $125,000 in savings is going to be worth more next year. When it comes to buying a home, your down payment is a big piece of the puzzle. It affects your price range, your monthly mortgage payment, and the amount of interest you pay over time. The purchase price is usually covered by a combination of two financial sources. The first is your own down payment, which is the cash you have. The second is your mortgage, which is the money you borrow. But how much money do you actually need to put down? The average home price in Toronto is over $1 million. So is $125,000 enough to buy $1 million property? This all depends. Right now, any property over $1 million needs a minimum of 20% for the down payment. This means you need $200,000 as a minimum down payment for any property that's over $1 million. So $125,000 is not enough to buy a property that's over $1 million. But is it enough to buy something for less? Well, that's where things are changing next year, and we'll take a look at it in this video. This is where doors open up for potential home buyers. Your down payment of $125,000 is going to stretch a lot further. Let's say you're making a down payment of less than 20%, and this is known as something called an insured mortgage. In Canada, mortgage insurance is required for high ratio mortgages. That's when a buyer makes a down payment of less than 20% of the property's purchase price. The insurance protects the lender in case the borrower defaults on the loan. Mortgage insurance premiums range between 2.8 to 4% of the total mortgage amount, depending on the size of the down payment. These insurance premiums are added to the mortgage principal. But why would someone choose to pay this insurance premium? I can tell you two reasons why. The first is because it allows home buyers to enter the market with a smaller down payment. The second reason is that it helps first-time buyers or anyone with a limited amount of savings to purchase their home sooner than later. But now let's say you want to avoid this premium with the same $125,000 down payment. Maybe you're one of those people that doesn't like paying extra for things you feel like you shouldn't have to. If that's the case, you'd be looking to make a 20% down payment, and that would be a property in the range of about $625,000. But we're talking about insured mortgages with home buyers putting down less than 20%, and that's where the focus is on, where the federal government has decided to make some changes to help home buyers. Here's how it works right now. Lenders use a calculation based on the property value. For the portion of the purchase price that's up to $500,000, you need a 5% down payment. You need an extra 10% down on the portion of the purchase price between $500,000 and $1 million. This only works with the price cap of $1 million for anyone putting down less than 20%, which means that if you wanted to buy a home for $1 million, you have to make a minimum 20% down payment. This $1 million price cap is what's changing this year. So as of December 15th, the price cap will be raised to $1.5 million. So what does this mean? Instead of needing a 20% down payment for any property that's above $1 million, you'll be able to make a smaller down payment for a property that's up to $1.5 million. You would need $300,000 today as a 20% down payment for a home that's $1.5 million. Under the new federal government changes coming December 15th, you only need $125,000 to purchase a $1.5 million home as an insured borrower. So with $125,000 before December 15th, you can only buy a property up to $1 million. After December 15th, you can get a $1.5 million home. Here's how that calculation works today. The first $500,000 of a property value is at 5%, so that's $25,000. The next $500,000 is at 10%, so that's another $50,000. That's $75,000 out of your $125,000 budget. The remaining $50,000 of your budget can still go towards your down payment, even though it won't help you get into that property range of $1 million, but it still helps bring down your mortgage payments every month. It also helps bring down the amount of interest that you pay on that mortgage over time. In fact, your mortgage payment drops by $348 per month with that extra $50,000 down payment. You'd also be saving $15,000 in interest in the first 5 years. So we know you can afford up to $1 million with this $125,000 down payment. What does $1 million home look like around the GTA right now? In Toronto, you have your pick between semi-detached or detached homes in various areas at $1 million, including the east, west, and central areas of the city. The condition of the property will vary, but most of these have 3 bedrooms. They'll have finished basements, with some having separate entrances for those who want to consider creating a legal basement suite. The style of the house is likely going to be a 2-story or bungalow. And just so you know, almost half of these homes I looked at were selling for less than their original asking prices. Pretty common these days being a buyer's market. In Toronto, you're also seeing condos sell in the $1 million range. Most will have 2 bedrooms and at least 1 parking space included. But unlike freehold properties, these condos are mostly located in the central part of the city. Condos these days are selling for less than their asking prices. In Durham, you'll find only detached homes at the $1 million range. These homes are mostly located in Whitby, Oshawa, and Clarington, the most eastern parts of Durham. A lot of these homes were built in the 80s to more recently in 2015. So you get a wide range of options if you're considering property age. They're all 2-story, no bungalows or split level homes, no townhouses or condos in this price range. They'll have 4 bedrooms and 3 or 4 bathrooms. These homes have about 2,000 square feet on average, and only half of them had finished basements. York region gets you mostly a freehold townhouse in the $1 million price range. They're located in all major areas of the city like Richmond Hill, Markham, Vaughan, Aurora, Newmarket, and Stouffville. These townhouses are in the 1,500 to 2,000 square foot range. In the last few decades, 3-story townhomes have become really popular, but these $1 million townhomes are all 2-story and built between 1994 and 2019. It's comforting to know that condo townhouses are selling for less than $1 million in most cities, with the exception of Toronto, where some are selling for as much as $1.5 million. In Peel region, you'll be able to buy a detached 2-story home with your $1 million budget with $125,000 as your down payment. These houses are found mostly in Brampton and Mississauga. The benefit of looking into Peel and York region is that property taxes tend to be lower compared to Durham region. This could be one of the reasons why you're not seeing as many properties sold in Durham in the last month compared to other cities. So that's an idea of what a $125,000 down payment can get you in the GTA. It works out to be a 12.5% down payment to give you a home purchasing budget of $1 million. With a down payment of less than 20%, it makes your loan an insurable mortgage. That means you'll see an insurance premium on top of your mortgage payment every month. And depending on where you want to move to in the GTA, you have lots of options, especially now with so much inventory and the rates coming down to help with your mortgage. Here's the good news that we've been talking about. Later this year, your budget is going to stretch even further. The federal government announced that starting December 15th, buyers will be able to purchase a $1.5 million home with just $125,000 as their down payment. Right now, if you wanted to buy a property for more than $1.5 million, you would need $300,000 as your down payment. Now you only need $125,000, but it would be an insured mortgage. Another major change coming on December 15th is the expansion of 30-year amortization periods for insured mortgages. This longer amortization period will be made available to all first-time home buyers, and this means you've never purchased a home before, you haven't owned or occupied a principal residence in the last 4 years, or you recently experienced a breakdown in marriage or a common law relationship. You can also qualify for a 30-year amortization period for insured mortgages if the property is a new build. What's also timing this so perfectly is that on October 23rd and December 11th, 2 more rate announcements from the Bank of Canada are going to happen. We anticipate rate drops to happen at both, especially with inflation coming down. The decision to have this change take into effect as of December 15th isn't a random date. It's time to coincide with the rate drops that we've been seeing this year, with 2 more coming before December 15th. It's also worth noting that the excess inventory is a clear sign that buyers are waiting for rate drops to happen, and they will be coming this year in October and in December. So watch out for those. The Bank of Canada is making their next announcement on October 23rd. If you're looking to stay updated, hit subscribe and follow for the best tips to help you reach your real estate goals. Thank you for watching, and I'll see you in the next episode.